afternoon, everyone. Welcome to this weekly outlooks. Day later than usual, being basically tied up with work. Yes, I still do currently work. However, plan is as I reach and get more and more consistent returns through trading and growing my capital, that eventually I'll be able to replace my income from work, and then therefore will not need to do it if I choose so. So anyway, guys, moving on from that, it's a bit about me. I'm also from Sydney, Australia. So yeah, we'll start here with pound yen, which last week I talked about that I was looking for a quick pullback play. You can see here on a daily chart, I was looking for a quick pullback to this 0.382 region. We had this daily bullish engulfing pop to the upside at daily support level of 137 spot 400, and it had a few decent rejections monthly, a bit too. However, just a quick pullback. If we look at the intradays here, pull it up from my journal, you can see I took an ABO on this as it was price was being squeezed in this descending triangle. Had a third rejection and I entered on this bullish engulfing during the Asian session. It then popped a little bit, but didn't really do much. Moved sideways, came back down, retested my entry area again, up again, retested. So to be honest, after the entry, it was pretty weak. It did need a bit maybe further development, but an ABO, that's the thing. You don't wait for that full confirmation. You got to take a bit of a punt. And for me, the rejections being around the third time, I like that. I like to see at least three. So based on my rules, I took it here. And if you're consistent with your rules and do that every time, that's the best way to eliminate emotion. So I took it here, and then you let probability play out. Took it here and popped up almost a bit over 1%, came back down. That point, trade had failed. I bulletproofed early the next day after the day of the entry. Came back down, stopping me out for break even. So no loss on that. I then, however, I took, after it broke here of this 1 hour 50, I then spotted another entry in IBOB, or probably an IBO, maybe A to be honest, because it did have a fair few rejections and it had a double bottom potentially on this 4 hour to confirm an IBOB, initial breakout A rather. That's when you have full confirmation on the 4 hour chart of a double bottom, some reversal pattern to indicate that yes, this is it. However, you can see I entered, could have been a bit of a better rejection here. It's pretty small volume at this point, didn't really have any nice candlestick. And then it just failed, crashed down. Like in hindsight, tad early, could have waited for further confirmation on this. So that was a minus 1%. And the last trade in the week I took was also another loss here on Euro Pound, which I, once again, daily chart. I was just looking for a quick pullback play. Still needed a few days in that week after this double bottom. So that was against me. Did break and close again above this monthly 50. So once again, but potentially needed more confirmation, and I was entering after this bullish rejection, and there was looked like a bit of support there, here, there, so, and there. So yeah, bit of a poor loss on that one, but I'm transparent, guys. I'll show you all my results. It's all part of the journey. You live and you got to learn from your mistakes. So see here, broke out, needed a better candlestick formation. You entered on that. So bullish. There's no bearishness in that at all. Came down, moved sideways, weak rejection, same thing. So 2 losses based on weak rejections. So when you're going against the momentum, you need to wait for that a bit extra. So 3 trades, 1 break even, 2 losses, 2 on pound yen, and the other trade being on euro pound. So moving from that, this week, these are the pairs I currently have on weekly watch. Currently, we've had massive momentum to the downside, especially pairs pretty much against the yen and the Swiss franc, as those two are the safe haven currencies. And most other currencies have had big bearish moves to the downside. Euro has been quite bullish. Dollar's starting to show bearishness, and actually we'll start on that this week. We'll look here at the Dow Jones Industrial Average, US dollar index. You can see here on a monthly time frame that we're beginning to get a breakdown of this trend line, which ever since the inception of this chart back in 2011, it has never broken. Yes, it's still a bit of a new chart, but you look at this, what can you also see at the top? The top of this bullish run, you can see a left shoulder, a head, and a lower right shoulder. So in terms of bearish price action, when you have a head and shoulders, when the more recently formed shoulder is a lower low, say lower low, previous low, that is the strongest bearish reversal pattern in terms of a head and shoulders that you can get. Sometimes you can get an equal shoulder, which is okay as well, but this is the best. And then you can also sometimes get a higher right shoulder, which, remember, in a bullish trend, higher lows, higher lows, higher highs, right? So if this shoulder here was to form up there, higher low, previous low, but right shoulder here, higher low as well. So that does not confirm or tell you anything about it turning bearish. You need to see a lower low for that to be invalidated. So maybe this could have fooled people, but it did test that same, had a little pop and then came down and confirmed that lower low, previous low in this head and shoulders pattern. So bearish divergence too. You can see the MACD here, right? High, high, low, slightly low, but this is much lower than here in relative distance to here. So there's a lot of bearish divergence here, and it shows because this month, third week in, we're starting to break this, and you can see here better on a daily time frame. So we'll see how this goes, but the dollar is starting to show bearish signs, and if this closes this month, my first target would be the monthly, and then if it breaks that, it's got nothing to stop it. It could fall previous low, who knows? Wait and see. So I'll go here to the weekly watch list. Euro yen. I was looking for a short, but never got an entry on this. Just came up here, moved sideways. It was all choppy on the intradays. Never got a clean entry, so I missed that trade. And look, it's worked out perfectly. Straight to 116 spot 100. Leaving it on watch for now though. Pound Swiss. I was looking for a deep pullback and then a wave 3, but it looks like it has had its extended potential, maybe wave 1 breakout. So a pullback, it does need a pullback, and as you can see on this monthly time frame, there's not much lower unless Wow. Like, yeah, only that flash crash, like in 74. Wow. This is held very well. Could potentially get down as low as the wicks. But unless it pulls back, I wouldn't be looking for a short. And at this stage, there's nothing showing for a long. Just more weeks to come. This I'd also like to get in for a short. Once again, you can see it didn't pull back enough. Look for that wave 3. Potential extended wave 1. And dollar yen, that was pound yen previously. Dollar yen, look at this, perfect. Monthly, beautiful high test rejecting that. We talked about that in Outlook rather. Massive previous month as well, and it's crashed. It's a shame, didn't get into the trade. There was no pullback. And that's the thing, see? That's why sometimes with an advanced breakout, you know, that full lower low, lower high happened yet for the retest. This has just gone high, bang, much lower low, no lower high at all. It hasn't even formed any high yet. So that's why the advanced breakout, sometimes with massive momentum, it will never pull back for the IBO or CBO. And that's just massively fallen. So as you can see all yen against yen and Swiss pairs there, and all massively weak, very bearish. So nothing really in the terms of Forex at this stage. Needs a lot more development. And if anything, I'd prefer to trade with the momentum rather than against the momentum. Because as you can see, it's been some big moves, big drops very quickly. We'll move on here now to equities. Start with, and once again, massive bearishness. Start here with SPY, which is the index 500, largest trading volume ETFs. You can see, closed last month with this massive bearish engulfing. And this month, weekly beta shows it, first 2 weeks. Bang, big bearish engulfing, massive high test. And this, once again, you may not even, once it goes, it may not pull back. So I'm looking at a short right now, probably not a leverage position. Adding to my inverse ETF position. And guys, please read into them before and understand them before you just copy what I'm doing. Because you need to know what's going on with your own money, not just copy hoping you do well. Really get it, just look into it, etfdb.com, ETF database. SPY, search panel, check out the holdings, Microsoft, Amazon, Apple, Google, all the usuals, the top holdings in that ETF. But it's basically all the sectors tied up into one. So yeah, looking very bearish now, and we're looking to see wave 1, wave 2 pullback, wave 3 potentially down these previous lows here at 234, and way down maybe to 225. First looking to see how it reacts to this monthly. That's what I'd be looking to at. Beyond that, this low here, and then, you know, my overall target for a deep pullback relative to this movement. This drop here, 57%. This drop here, a bit over 50%. 260% gain, 107% gain, 400% gain. So at least here, potentially further, way down to 0.75 fib. Who knows? But for me, this is part of my thinking, right? I risk 1% on an inverse ETF, 1% of my total capital, right? So say 500,000, I risk 5,000, right? 100,000. Let's just go with that. $1,000. You look at this massive movement, right? 11 years, they had a decent correction. Small one, small one, small one, little bit of a one, small one back in 2018, and now this. So the downside is much greater from my overall understanding of the markets and from other things I can see than the upside. The markets are due a pullback. Virus could be the catalyst. So, look, I'm not saying it's going to go there right now. This developed over a year and a half. This developed over 2 years. This, 11 years. So this drop could be 2 years, 3 years, who knows? But the point is that everything in that chart will tell me where it's going to go next because, once again, remember, it's a bullish trend, higher highs, higher lows. If we come down here, make a lower low, a lower high, once that lower high is confirmed, because there's been two actions, the lower low and the lower high, therefore confirming that it did not break this high, I'll then be confident to say, a lot more confident, that the trend is now bearish. For now, it's just a pullback because there's nothing here. The daily, yes, you can see higher low, previous low, higher high. It's now invalidated this low, and potentially this is the new lower high. So that's why you can look across multiple time frames and confirm what this month with 22 days left will do. This Monday, the 9th of March, futures for the US are already indicating that the Dow has gapped massively 800 plus points. So when the market opens, I would not be surprised to see this open and just, that's it. No pullback, just fall straight down to this previous low or beyond. I don't know. Anyway, moving on from that, let's see. I'm in Australia. Look at this. This is the Australian index, the ASX 200. This trend line's been holding since 1991. Rejected it once, twice, three times. Let's see. If it breaks this, it can fall as much as it wants. And you can see, like, look, they're saying today that the Australia has gone into its first recession since 1991. If we look here at 1991, you'll see it had a bullish movement, so maybe that isn't the year. Anyway, just falling, guys, and if we go here to look at the other countries, so Dow Jones broke of this day. I don't want to go through this quick now because I've been yabbering too much. Monthly, no bearish confirmation. Weekly, no. Potentially, it's getting there. Daily, yes, it's definitely showing bearish confirmation. Nikkei 225, which is the Japanese market, third largest market in the world behind China and the US. Double tops, breakdown, previous low. If it breaks this low, bearish trend, look out. China 50, triple tops on the monthly, potentially making a lower high now, previous high. Let's wait to see. It's still a bit moving sideways. Once it breaks below this support, we'll see what happens there, which also lines up with the monthly 50 or thereabouts. This is the European market. Oh, sorry, the FTSE. You can see this massive bearish last month, this month as well. Look at that. %13.5% drop in 1 week, right? And they say crypto falls like this, which it does, but so does this. So does the regular markets that people have known about for the 30, 40 years. That's why, you know, they are the thing to do. They are the darn thing. But guys, let's face it, you don't always get ahead of other people if you do the same thing as everyone else. So crypto, still a very cheap and undervalued asset class with only in the billions total market cap. Go have a look at equities and the total market cap of just one country, US trillions. It's a joke. This is a German DAX, double tops. No low yet on a monthly. Lower low on a daily. Breaks this weekly low. Same thing. You don't know how far it's going to fall. And that's the UK 100, which we already looked at. So with different values anyway. Now we'll move here on to crypto. XRP. So on previous market outlooks, I was on potential pull back to around this 50, which it almost got to, but it didn't quite reach. And then you can see like yesterday, 8th of March, this big bearish engulfing, now invalidating this ascending trend line. Excuse me. Still potentially got this head and shoulders, but as I said, remember, the shoulder here is lower than that of that shoulder just. Monthly high test. It's not looking good, guys. Crypto. This is very bearish. But for me, I don't trade crypto. I just long-term buy and hold. Dollar cost average. Bitcoin. Also see a potential inverse head and shoulders. At the bottom of the shoulder there was to be equal. Remember, if it drops lower and makes a lower right shoulder, that, to be honest, it's not really bullish then. It's more, it's not a bullish inverse head and shoulders. Let's wait and see. It might come down and retest this. Reject. Halving coming up next month. But bearish for now. Ethereum, same thing. All the cryptos are a bit bearish for now. Let's see. This is in line with the total market. The market's just dropped across the board. Crypto wasn't really around the last big drop we had, the recession in 08, 09. So let's wait to see how it reacts now. You can see also here, Litecoin, look. Inverse head and shoulders. What's it testing now? Look, perfect. Look at that. The wick lines up exactly right there pretty much. 47.35. Bullish divergence. Crypto could just take off because, as I said, it's still undervalued. And when people start and actually it's announced through the mainstream media, this is it. Recession's called, potentially into a depression by the look of it. Because I tell you, like, this is just a ridiculous bubble. It's the mother of all bubbles. It's the bubble, bubble, bubble. All inside each other. So if they're taking profits, they're looking for something to invest in. These cryptos, they're all very cheap. They're all near their bottoms. So to me, if I was taking money out of the stock market, other than of course the safe things that you invest in, like government bonds, gold, silver, rental property, I guess, if it's rented out, as long as you're not too over leveraged and the mortgage isn't ridiculously high relative to your total income, remember interest rates now are very low, and you have to have enough breathing room in your income because once the reset happens, interest rates will start to go up again unless they issue in a new system. But for now, it's the way it is. So ask yourself, if interest rates were to go up, you know, to non-recession levels at the beginning of the next cycle, could you afford to pay your mortgage, or are you too heavily leveraged? That's when you start to get into stress. Now, actually, speaking of that, let's go here to the real estate sector and have a look. This is Vanguard. This is a passive real estate fund. You also see this big bearish breakdown here. Lower low, previous low. Starting to be bearish as well. It's up at the highs. That's gone up, what, 400%, same as the stock market in 11 years. Starting to show bearish signs. Another one, excluding US real estate. It's better with US real estate, to be honest. This is massively bearish. Bearish engulfing last month, rejecting with the high test. Very bearish, guys. This is, sorry. Yeah, this is the one. This is Australian property. Starting to show very bearish signs. Market prices they've been talking about, funnily enough, last month, going up, and yet they did, but they rejected. Now they're breaking. So, break of this monthly 50, break of these lows here, bit of support at, say, $12. But this reflects the overall market. Look at 0809. 80%. 80% drop. I'm not buying property now. I want it rented and being paid for me. Otherwise, it's going to eat into your income. So that's something to keep in mind, guys. Don't be over leveraged. So just a quick summary. Not much on Forex, not much on crypto, not much on equities. Everything pretty much across the board is bearish. Massive momentum the last 2 weeks. Markets, German DAX, London FTSE, US, Japan, Australia, Canada, everywhere, all looking bearish. Bearish trend starting to form, waiting for those lower highs, but we might not even get them. The amount of momentum. Gold is, as you'd expect, been strong. While most things have been going down, gold, a little bit of a drop, but nothing major. Gold is a hedge. I'm in gold currently. Don't really hold much Aussie dollars because, well, you have a look at the Aussie dollar. Let's have a look at this. This is its value relative to the US. It's at 65.4 today. Weak, very weak. Don't want it. So, guys, that's it from me for this week. Really nothing, like no positions, no potential trades on the horizon. Potentially going to add to my ETFs, buy some more of the inverse, particularly SPXU ticker code, which is inverse for the stock market. Apart from that, gold, silver, bonds, but I don't really buy bonds. Still really, like, I'm only 33, so I feel I can afford to take the risk, and I'm in, yes, higher risk, but with time on my side. So anyway, guys, hope you enjoyed this. Take care. Until next time, I'll be in touch, keep you updated. Have a good one. Over and out. Cheers.